Joining us to break it all down is BD8 Capital Partners CIO Barbara Doran and Morgan Stanley Global Chief Economist Seth Carpenter. Barbara, I'm actually going to talk a little bit about the market action today, but do you buy a lot of IPOs? Because ARM is coming in the morning probably. Would you ever buy one after the open on the day of if you didn't get an allocation?
I would actually, if they price it well, and I believe in the stock, and you think it's going a lot higher, a lot sooner, I certainly would buy in the aftermarket. I think ARM is a very interesting one. There's a lot riding on this deal, and it's not just, raising money for the company, but it's really about the IPO market in general and tech IPOs specifically. And as you know, it's been very anemic in the IPO market since 21 when we had record issuance with nearly 400 IPOs, 150 billion raised. This year, it's 63 IPOs in the first half with 10 billion raised. So it's really important that they get this right. And Leslie just did a very good job of outlining, all the questions about the stock. And so that we know would be incorporated into the pricing, and also looking at demand from institutions, because you want that demand there to underlie the stock. So it's very important they get the pricing right. But yes, I would buy if I believe that there was more, that the stock was never going to look back on the pricing. And we'll see on the pricing, because this is a high quality, low risk name. They've got more markets to go into, and it's probably deserves a very much higher multiple than its growth rate would seemingly justify because of that stability.
Okay. Sounds like you have a somewhat positive take. Seth, it's coming to market in this environment where investors are concerned about the Fed and the Fed is concerned about inflation. The CPI number this morning wasn't far off expectations, but maybe a little hot. What do you think it means?
Yeah, just a little touch stronger than we were expecting, especially on the core number. I think everyone saw the rise in gasoline prices for headline. So what does it mean? If we break down the components, we still have negative inflation for consumer goods. We still have a downward trend for rent inflation. So what I think it means is the trend that we've been seeing and that we've been calling for, all year of disinflation that's going to make it easier for the Fed to call it quits on the rate hikes. I think this print sort of kept us on that track. So our baseline view is the Fed's already done with their hiking.
Okay. Barbara, your thoughts on this? I mean, especially with CPI today, it kind of seems like there was something for everyone here, the bulls and the bears, which perhaps explains why the S&P closed fractionally higher and the Dow fractionally lower today.
Yeah, no, I agree. I've happened to take, if I have a bullish take on that, and I agree with Seth, because I look at the core CPI and what's happened over the last year. And if you remember, in September, it was 6.6%, stayed above 6% till December when it dropped below. Then for 4 to 5 months, it was at 5.5, 5.6, and then in June, we saw it drop below 5%. And since then, it's been 4.8, 4.7, 4.3% for August. The trend is very clear, and it would be surprising if that did not keep going down. Now, the Fed is likely to stay higher for longer because it is so gradual and seemingly incremental. But we're seeing still a very strong economy with some slowing in job openings, some slowing in wages. But it's very encouraging that the inflation numbers will continue.